See breakfast. So the Central Bank of Nigeria, the CBN, that is, has raised its lending rate again, and this time around it stands at 27.25%. This new rate is an increase of 50 basis points from 26.75%, which was announced by the Apex Bank in July this year. The new rate also reflects an 8.5% increase in interest rates under the current leadership, which took office about a year ago, and it is the fifth consecutive rate hike this year alone. The CBN says it's aimed at curbing inflationary pressures despite signs of moderating inflation. Well, according to the CBN Governor, Mr. Olayemi Cardoso, the decision was unanimous among the 11-member Monetary Policy Committee. It's a move targeted, it says, at heading off the cost-push effect of petrol price hikes while attracting inflows to strengthen the naira.
500 basis points to 50% from 45%, and merchant banks by 200 basis points to 16% from 14%. 4. Retain the liquidity ratio at 30%. Considerations. The committee noted the moderation in headline inflation year on year in July and August 2024. The MPC noted that even though headline inflation trended downwards due to a moderation in food inflation, core inflation has remained elevated, driven primarily by rising energy prices. The uptrend poses severe concerns to members as it clearly indicates the persistence of inflationary pressures. Members thus reiterated the need to work in close collaboration with the fiscal authority to address the current upward pressure on energy prices.
All right, let's compare notes now between what the government has said now. Let's bring in from Abuja. He joins us via Zoom, a public finance analyst, Olusegun Elemo. It's good to see you again. What does this really mean? Talking about this fifth consecutive increase in the lending rate in Nigeria, what does this mean?
Thank you very much for inviting me. In terms of what it means, I think every Nigerian can relate with the decision of the Monetary Policy Committee, and not just this particular decision. I mean, all the decisions that have been taken over the last 5 MPC meetings. And what I mean by saying that every Nigerian can relate is that we all go to the market, we understand that the cost of living has increased, the prices of food and commodity has also skyrocketed. So we can relate with it. The only thing is that since Mr. Cardoso's appointment in 2023, I think he made it clear that he wants to focus mainly on the functions of the central bank, which is providing policy direction in terms of monetary issues in the country, and that which he had done. He had also decided to focus, and those decisions really are driven by certain fundamentals. He has also decided to focus primarily on contractionary policy measures, which is, of course, increasing interest rates, mopping up liquidity from the system, and slowing down the economy a little bit. to be able to address inflation. On the other hand, many people, believe that perhaps we should look in the direction of some expansionary measures because of the likely impact of this contractionary policy on growth and productivity. Now, I have certain issues with the direction in which the central bank had gone over the last 5 MPC meetings. Yes, I agreed at the time when he was appointed that we needed to implement contractionary measures, especially because we just came out of the elections and there was excess liquidity in the system at the time. Remember that we even had to change the currency to be able to address liquidity issues in the system. And that distorted the economy quite significantly. And it was then difficult to drive back from where we were at the time. And yes, he had also decided to take the hard decisions of restructuring the monetary policy environment. The only issue that I have is that the problem of inflation in the country today, largely driven by fiscal decisions and not necessarily monetary issues. And he also mentioned it, the issue of the subsidy on petroleum products and the rising energy prices. That is the fundamental for inflation in Nigeria today. And of course, the harmonization of the foreign exchange. So whether you can use monetary policy instruments to then address those fiscal imbalance is what we are hoping that will occur. Howbeit, he had taken those decisions over the last 5 MPC meetings. I believe he's also seen some gains in the last 2 months. For instance, the inflation, dropped in July from 34% to 33%, and then dropped further in August to 32.15%. So perhaps that's what's encouraging the Apex Bank chief to then continue in this contractionary pathway.
So if you want to get it right, because all of this is just a race to curb inflation. So are you saying that the CBN approach is not essentially working because of tightening monetary policy has not had the desired effect on inflation? Is there a disconnect between the policy and the root causes of inflation in Nigeria?
Absolutely, absolutely. You see, what was the exchange rate in September when Mr. Cardoso was appointed? What is the exchange rate now? What was the inflation rate when Mr. Cardoso was appointed? What is the inflation rate now? In January, inflation was at 29%. In July, it was, in June, it then moved to 34%. When you compare what happened in June, year on year, with what happened in June of 2023, you would see an upward shift of about more than 11%. But again, all of it is not to put on Mr. Cardoso's table, because like I said, there were certain activities that occurred before he took office, and he needed to correct some of those issues. The only issue, like I said, is that you can hardly correct fiscal imbalance with monetary policy instrument. Yes, there are a bit of it that you can address, and like I said, it's going to be a give and take scenario. What do I mean by that? Recall that even the chief executive of Dangote Group had come out at a point to say, we can't continue this contractionary pathway. It's now more difficult to borrow. It's even more difficult to invest and open up the economy, stimulate it for growth, provide employment for our people. So if you then continue to raise MPR, yes, you will be able to attract foreign inflows, which is what the CBN had been able to do. And you know that they've issued several bonds recently, which has brought in FX liquidity into the system. That's a gain on the one part. But even that FX liquidity that it had brought into the system, how much impact has it had on the foreign exchange in terms of naira to pounds, naira to dollar, and all of that? You see, there are many structural issues that need to be dealt with simultaneously. And you cannot isolate monetary policy decisions to tackle these challenges while, the fiscal authorities, continue in their usual operations.
Right, and of course, you've also spoken about the inflation rate that reduced between July and August. But then the CBN also notes the disasters, the devastations recorded of recent. The energy crisis is still very much upon us, and then the impact of the floods. How do you think this would also reflect in September, for example, now, and how the country will cope with that? What's your take?
Well, I think that for the energy issue, it's going to be an add-on to the constraint that the people are feeling currently with regards to inflation. Perhaps maybe by the time we then have the inflation numbers for September, where maybe a marginal increase, but I think that the floods will certainly drive food inflation further. And that's where I think that the fiscal authorities need to be at their best. For instance, you would expect that by the time we commence the Naira for Crude initiative, there will be some respite a little bit. But even before then, the argument between the Dangote refinery and the NNPCL, it's something that leaves a bad taste in the mouth. And I expect that the fiscal authorities will be in charge in all of this and not, just leave the CBN to continue to roll out measures to address things that are, largely caused by fiscal imbalance. So on the one hand, the energy prices that continue to rise and unstable, and of course, it may continue in that trend. The question is, how will the fiscal authorities, help the people to absorb all of the shocks that are coming from this? You would expect that investments will now be made in critical sectors and not just, and those investments will be monitored to yield, expected results. And what do I mean? I mean, in terms of allocations to development sectors in health, education, transportation, and agriculture will be monitored, very close to ensure that policy objectives that have been set in that regard, are actually materialized. Yes, the impact of the flood is there. Even before the flood, what we were facing with food crisis. You would expect that this, will further worsen, the food crisis situation in the country. But hey, we're hoping that the fiscal authorities, move real quickly to address whatever burden that could emanate from that.
Mr. Olayemi, I'm wondering why you didn't mention the energy sector, especially the power sector, because, according to many industry leaders, looking at, especially Center for Promotion of Private Enterprise, they argue that the CBN has overstretched its monetary policy, making borrowing prohibitively expensive, so much so that this will affect businesses, and we are likely to see some businesses scaling back their production and all of that. We just had a conversation with someone from the power sector who said that metering is very key to tackling energy theft and also to boosting the energy sector. He now advocated that metering manufacturers or meter manufacturers should be able to access loan with a single-digit rate, from the CBN. I don't know, how realistic do you think this is going to be? Do you think that, can materialize?
Well, there's been lots of metering initiatives. What I would say is that we have to be intentional, about where we want to be as a country. And being intentional would mean that every hand needs to be on deck. All the stakeholders need to agree on a common front and to say this is the approach. For instance, all of the monies released for metering under the former CBN governor, to what extent has it been? How much of the metering gap have we been able to cover? And even when these meters are given, how are they given? Do people? You need to speak to consumers and get a consumer perspective to this metering issue. And that's why I'm saying that people need to be held accountable. Yes, the idea of implementing some expansionary policy measures on the monetary side is very, very key, so that investors, business owners can have access to capital. And it is true, especially for the energy sector. So the question now is the Apex Bank willing to, adopt that measure to free up the economy a little bit and, lower the interest rate so that, business owner can invest further and possibly hire more and reduce unemployment in the country. But this issue of energy crisis is largely affecting the micro, medium, and small enterprises the most. And they are the engine room of the economy. And I just wonder if before this level of MPR, MSMEs are constrained in accessing capital to be able to do their businesses. I wonder how they're feeling right now. And I saw a testimonial of a business owner in Lagos recently who said he's planning on shutting down some of his outlets. And that's the testimony of many small business owners. So you have a situation where there is no energy security with regards to power situation, and then petroleum product prices are skyrocketing, and you are now raising NPR significantly. You see,
right.
I think we need to reconsider this approach and possibly like I said, implement some expansionary measures that will free up capital, stimulate the economy, and provide a needed environment for growth and productivity.
Right, and quickly, Mr. Elemo, you've spoken about the government on the need to be intentional, and in the papers this morning we saw several of them talking about the presidency saying it will not intervene in the issue between Dangote and the NNPCL, the face of that is. But then there is an October 1 date that everyone, including Dangote, is hopeful of, talking about the sale of crude in the naira, especially on what it means, the gains that, the federal government can get to reduce all this, negative numbers that we are seeing.
Yes, well, if the federal government says it won't interfere in what's happening between the NNPCL and Dangote refinery, yes, to some extent, the federal government is right, because, the NNPCL is supposed to be a private, publicly owned entity, but running as a private enterprise. So to that extent, but again, it's a state-owned entity, and I think there is some level of intervention that the federal government can provide, especially with regards to what's happening. And for me, is that let there be transparency in how much Dangote refinery will be buying the crude from NNPCL, NNPCL, and transparency around how much the Dangote refinery will be selling petroleum products to NNPCL. And I said my own position is that we cannot monopolize this idea. Monopolize sale of petroleum products to NNPCL. There must be some freeing up of that space. Let anyone who has the capacity to buy from Dangote refinery buy. The private marketers, the independent marketers, let them buy and let everybody put their products in the market to sell and let the competition begin. Then we can know that the sector is fully deregulated. But I think that with regards to pricing transparency, I think the federal government can intervene to some extent.
All right, Olusegun Elemo, a fine place to rest our conversation this morning. We thank you very much for your contributions.
Thank you for having me.